Good afternoon, everybody. Welcome, welcome. A few people making their way in here. This is another installment of the Questions About Music Colloquium series here at the Department of Music, a series where we have a range of guests. We've had musicians, performers. Today we have an academic researcher, also a friend of mine. I think we were saying it's been probably 20-something years to date ourselves. This is Andrew deWaard from University of California, San Diego, who has just written a new book, Derivative Media, How Wall Street Devours Culture. And today we'll focus on some of the musical elements of the, I guess, broader equation here, where we're looking at something that's sort of one step past how a lot of political economy research in music tends to operate, which is, thinking about record labels and ownership and what that means for the music we hear everywhere or consume. But you've sort of gone one step behind that, right? To look at finance and Wall Street and make an argument for needing to look at things at that level to really get a sense of the times that we're living in today. And so much of our experience of music now is really told through this book. And it's one that has, we don't have a slideshow today, but it's full of beautiful, colorful charts and graphs that really make you convinced of the situation. And these are, I'll let you maybe share a bit more about this. All of this is available online, open access. You can check out the charts and the graphs. And I know we have people on the live stream. You can potentially follow along in that way if you will. And our story goes back to the University of Western Ontario, which is Western University now. We were both in media studies as undergrads. I didn't really know professor was a job back then. I wasn't thinking about this so much, but our paths have taken us in various directions, different institutions, and now we do similar research across the increasingly tense border of Canada and the US. But we've done a lot of collaborative work, and maybe we'll talk a bit about that later. But I'd like to get into some questions about the book and introduce all of you to the work that Andrew's done here, and open it up to questions as well. I think some of us, I didn't know, I'm happy to admit that I didn't know a lot of the inner workings here that you trace in this book, and I know a lot of people in our field didn't, and I've seen folks at conferences sort of shocked to see some of the statistics and the information that you've unearthed here, to really provide a sense of what's shifted over the last few decades, and what this relationship between, as you say in the title, Wall Street and culture really is. We also wanted to point out that Andrew's 5-year-old packed for him today. So he's got the San Diego casual look going.
Sorry, the dress shirt was there. It didn't make it into the luggage.
It happens. So we both also have children around the same age. So this is a nice visit as well to get you to meet both kids for the first time. I mean, you met Felix when he was very little, or big little, but now to see them both again too. So let's begin perhaps by thinking about the title. Derivative Media is the title of the book, or at least the part before the colon. And you mentioned in the book that there's sort of two key meanings of derivative that are central to the story that you're telling here. And I know there's more than two as well, but can you briefly introduce us to those, at least the two key meanings that are important for us to think about why the book is titled this way, and what that might mean for music?
Sure. So first off, thank you for having me. Thank you all for being here. It's a real honor. So thank you so much. Happy to chat about derivative media. Never thought I would be here 22 years later talking about Wall Street. Not something I am actually very interested or passionate about, but something that presented itself as unknown within the scholarship, let's say, of its really deep roots and deep effects on culture. So it kind of started as a pun. Everything seems derivative today, right? Sequels, franchises in music, everything seemingly is a cover, an interpolation, a sample, remixed, sped up, sped down, all these things that are derivative of something else. And then I was learning about, or I experienced the financial crash, experienced all the arcane financial instruments, one of them which is the derivative, and thinking at some point, oh, that's funny, these two phenomenon, could they be related? And my research would say very much so, right? And so it's the financialization of culture and the homogenization, the everything being a copy of a copy. Those two are directly related. So if you're unfamiliar, which would be very common, what is a derivative? It's like this strange financial instrument that allows you to speculate on the price of something rather than, it's not basic investment, oh, I want to buy a stock. It's, I think the price of this thing is going to change, so that's what my investment is. It's like a futures contract, an options contract, a swap, a collateralized debt obligation, all these really strange configurations that engineer particular outcomes through speculation. And so that is increasingly how the world economy works. The size of the derivative market just dwarfs the quote unquote real market. So part of the book is like, let's understand how finance works, how derivatives work, specifically how does it impact the cultural industries. But then as I was doing this research, it turns out derivative has a lot of different meanings that are very applicable in intellectual property contract regulations. Derivative rights are so important, right? The right to take a song and do something else with it, the right to take a story, franchise it, merchandise it, license it, all that thing, derivative rights. Derivative as a sort of qualitative judgment, oh, that's so derivative, right? How often do we now hear that phrase because it is increasingly common? And so putting these all together, it felt like, oh, this is a derivative era. This is so common. A part of the book is like a periodization claim that particularly with the rise of hedge funds and private equity companies and derivatives traders in the late 90s and early aughts, we now are in this 25, 30 year period where Wall Street has so much more influence, particularly in the cultural industries. So that's the title, Derivative Media, combining those things together as a concept to understand how the cultural industries operate. I mostly look at film, television, and popular music, but you can apply it in lots of different ways.
Mm-hmm. And I think maybe that finance piece or what financialization is, that might be something not commonly familiar, and I know in your book it's very well written in terms of bringing people along for this ride and providing things as tools or nice little snippets that break things down and help us to understand this world that we don't always think about when we're thinking about listening to a playlist on Spotify or taking a look at the Billboard charts or what have you. So maybe to think a little bit about that concept of financialization in the book, and obviously you're arguing that we need to pay careful attention to finance and its role in sort of dismantling the creativity of the cultural industries. But maybe we could talk first a little bit about the stock market and its effect on the music industry as sort of being a big key piece of financialization.
Mm-hmm. Yeah, and thanks for bringing that up. Like the book is intended as a sort of primer on finance. If you know nothing about finance, that's who it's meant for. My wife is a costume designer, works in Hollywood, really encouraged me to write this for workers here. That's who needs to know this the most. And so all the academic jargon is pushed into footnotes and it is designed very schematically to here are 7 things about finance you need to know. Here's a chapter on music where it specifically applies to music. Here's film and TV. And then here's the second half of the book that's all specific textual examples of the effects of finance on hip hop and comedy and blockbuster movies. So yeah, the key chapter I think is, here are the tools of financialization, and the stock market is the most common one that we're familiar with. We are maybe less familiar with, as I term it, it's just an inequality engine. It is, most of it, most stock equity is owned by the wealthiest 1%. If you up it to 10%, then the vast majority of stock market is redistributing wealth upwards. And the two main ways that happens is through a really benign tool. You may have heard of a dividend, right? You invest in a company, you get paid out dividends, right? Well, dividends are inherently profits of a company that are not reinvested in its employees, in its labor, in its research, and instead distributed to investors who, again, are already disproportionately wealthy. So you are redistributing wealth that way. And then the new, bigger one is now what are called stock buybacks. A company will take its profits and just buy its own stock. This lowers the amount of stock of that company, which increases the price of whatever is left. So you are increasing the value of all your wealthy shareholders, how much they hold. Apple, for instance, spends literally hundreds of billions of dollars buying back its stock. It is an intense amount of redistribution. And so I track it for media companies, and I tallied, over the 25-year period I looked at, it was over 300, it was at least 300 million, if not 400. I know I'm messing up my millions and billions. An insane amount of money that I then said, how many musicians would this have paid a living wage to for 5 years? And it was 1.7 million. I remember that one specifically. So instead, we are paying wealthy shareholders when we could be, paying musicians more than a fraction of a penny a stream, right? So that's the main, looking at the stock market, looking at dividends and stock buybacks, and then looking at how CEOs in particular are, compelled to behave in certain ways based on the stock market. They are paid a salary, but really they're paid in stock, and thus they need to increase the price of that stock to make money. So they are incentivized to do things like dividends and buybacks, and that plays a role with the other financial tools we can talk about as well.
And I think, with some of these graphs too, I think just even thinking about, I did put one in a bookmark. It's probably tough to see, but even this blue line, if you see at the top, is the average ticket price from about 1985 until probably 2018 or 2017. And the green line is the consumer price index. So when we're thinking about, where these funds are going, I'm sure at the same time we're all familiar with seeing the average price of a concert ticket, at least for certain artists, going up and up and up to the point where you might be wondering how many of these can I afford to do in a summer or over a year. You really have to make your decisions, and that's just becoming part of our everyday life as music consumers. If you're somebody who likes to attend those sorts of events, right?
Sorry, I just had to check to make sure it was over 300 billion spent on stock buybacks and dividends just within media companies. Yeah,
it's a big difference from a million. So that's the stock market, probably one of the more familiar tools here that you're talking about within financialization. But there's also private equity, hedge funds, venture capitalists. Could you tell us a little bit more about these hidden aspects of financialization? A lot of stuff that I didn't know about and have learned since encountering this work.
And me neither, right? And the origin story of this book is being at an industry conference in Los Angeles, and film and TV panels, all these people talking about how to finance your film. And there was a panel of private equity people, and I'm like, wait, who are you? And so I started digging, and then realized to understand how Hollywood worked, I need to understand how private equity worked. And from there, hedge funds, corporate venture capital, and then asset managers. So those are four big, sort of often unknown, I would say increasingly known, as you see these companies bankrupted by private equity, it's become more known. But private equity is a really strange kind of investment fund where it's like Bain or Blackstone, KKR, these companies that pool a bunch of investment money from wealthy investors or pensions or university endowments, put together a fund for 5 to 10 years. They're going to go and buy companies with that fund, saddle them with debt, extract dividends and fees from them, lay off as many people as they can, streamline it, and then either sell it to someone else or let it go bankrupt. A lot of people are like, how can you just buy a company and let it go bankrupt? Isn't that wrong or have some negative effect? Usually it has a negative effect. To go bankrupt, your reputation is ruined. But if you are a private equity company, that is your business plan, and you don't suffer those effects. Oh, one of my investments went bad. I have lots of investments. It happens, right? It doesn't affect them in the same way. So yeah, private equity is like chewing through so much of the economy. Music particularly, Warner Music, the big record label, EMI, famous record label, run into the ground, bankrupted by a private equity company. The consolidation that has occurred in record labels and particularly in terrestrial radio, iHeartMedia, Cumulus, etc., all fueled by private equity. And now we see a lot of catalog purchases, right? Hypnosis was the investment firm that was buying out, hit song rights, publishing and recording, all fueled by private equity. And yeah, this is a pretty dangerous phenomenon. It occurs because there's like this tax loophole, the carried interest loophole. Pretty uniformly agreed upon predatory tactic. It's just that they have so much power and financial lobbying ability that it continues on. So that's a big one to know about for music. Another one is hedge funds, which are similar. They're like a big investment type that is generally only available to the ultra wealthy. But instead of buying companies, they are doing more like high risk, quick investments. And then they have this particular tactic called they call themselves activist investors, but they'll do things like publicize a letter where they're like, hey, AT&T, you just bought Warner Brothers. I think this was a bad move. You should fire your CEO. You should pay more dividends. You should fire a bunch of workers. You should buy back your own stock. You should do all these things. And I arranged a bunch of other hedge funds who agree with me. They call that a wolf pack. And we think you should do this, or we're going to all sell your stock. And so in the case of AT&T, the example I just gave you, they did all those things. Fired their CEO, did dividends, buybacks, fired a bunch of workers, and sold off Warner to merge with Discovery, which has been a total disaster. So hedge funds have this like activist strategy, and that's how they make money for their investors. And then we have corporate venture capital. You're familiar with venture capital, I'm sure. That's sort of like investing in early stage companies. But big music companies, big media companies have their own venture capital arms where they will invest in what they think are the next big music companies. Universal Music Group was I've talked to a few venture capitalists there. Quite a ghoulish profession, and they have a very different approach to how music works and how the industry should work. But they're basically looking for any new thing, and they'll just buy it up, right? Invest in it so that they get access to the data, access to how it operates, and then if it's about to get big, they have first dibs at kind of buying it out, right? So yeah, corporate venture capital is a kind of research and development phase within big companies. And the last one is asset management companies. So that's BlackRock, Vanguard, State Street. Instead of they have their clients are like university endowments, pension funds, other institutional investors who have, it used to be the case that a university endowment would have its own investment manager, or a pension would have its own investment manager. Now they outsource it to a big company like BlackRock or Vanguard, or lots of people will start buying, if you have Robinhood on your app, you can invest in index funds or mutual funds. Often you're buying like a Vanguard index fund or a BlackRock, buy the entire S&P 500, it's a very safe way of investing. The downside is that it has been consolidated to these three big companies who have just slowly built up stock equity in nearly every single company in the economy, and in many of them, the three of them own about 20% of every company. So in media companies, all the big media companies have a 7 or 8% stock holding from Vanguard, BlackRock, and State Street. And so all the voting rights go to that company instead of individual stockholders. They call it horizontal shareholding or common ownership. And so then, it's really fueling consolidation. Like, why compete when you are owned by the same people? It really depresses wages and makes prices go up. So those are the four big other categories that are under-acknowledged, but really worth understanding if you want to understand how the political economy works today.
Yeah, and thinking too about how many radio stations there might be, or record labels there might be, the further that gets from different regions and the more varied that is, it's been shown that there's fewer opportunities to get into those circuits of being circulated in some way. And once you do, it's probably pretty great because you're reaching so many people at once. But the number of artists that are able to sort of enter into that level of the music industries, it seems to be becoming fewer and fewer, perhaps. And you mentioned talking to venture capitalists in your research, and we have, as I mentioned earlier, a lot of charts and data and graphs, and it makes me think about some of the work we've done, going to Parliament and talking about how musicians are making a living today or aren't, or some of the issues they're facing. And that policy circle is somewhere where a lot of musicians don't feel comfortable being or want to be or to speak out. I think Brian Adams was doing a bit of that. It wasn't your everyday or independent musician who is entering into those spaces. So in some of that work, we've spoken to musicians and brought some of that material to government to provide that broader picture. And certainly speaking to a venture capitalist or having the ability to look at massive amounts of data, visualize them in charts and graphs, that's not always a comfortable space for somebody who's doing creative work, artistic work, musical work. So can you talk a little bit about that method and maybe what it means to be working with so much data or speaking with these individuals, keeping in mind, going back to that massive gap between how many working musicians could have been funded by the amount going to dividends. How do you keep that sort of piece of the puzzle in your mind while working with your methods, right? What this means for musicians, what this means for artists, and some of the methods that you're bringing to life in this book.
Yeah, so I'm glad you brought up the Parliament thing. Unfortunately, when it comes to policy circles or trying to influence certain stakeholders, you're far more legible when you can come with here's the data to support it. And so that's one reason that motivates doing this kind of work. Brian and I and Brianne Selman at University of Winnipeg have the Cultural Capital Project. We're trying to do this for the Canadian music streaming world. At UC San Diego, I work with some folks where we have the Media and Consolidation Research Organization lab, macro lab. We're similarly trying to do that and influence policy. We understand that we need to gather data and present it in a way that is legible and persuasive. We weighed in on when Amazon was buying MGM. We clearly failed. They bought MGM, no problem. But to be able to argue with or argue against the idea that bigger is better, mergers are beneficial for everyone, you need to show how it is detrimental for workers, for diversity, for variety, for all the things we care about in music and culture. So that's one thing that motivated me, I think. And another was I just like tinkering and working with things, but I'm not at all trained in any of that. I just fool around on spreadsheets, and you can increasingly just YouTube how does a pivot table work? And it's really easy to take a whole bunch of data and organize it, and nothing in some of this will look complicated, oh, you've gotten 40 years of data together to show this trend. It's all pretty basic formulas and pivot tables to do that. So one thing I think is we should not be as afraid to work with data, and that we can be a little more legible to certain people when we can do that, when we can make a case that is both qualitative and quantitative. And then I would say I was also just tremendously lucky to have access to particular financial data, which was that you may have heard of a Bloomberg terminal before. It's what investment bankers use. I had a version of that called Refinitiv that our library happens to subscribe to. It usually costs $20,000 a month, but our library has access to it, and so I could extract, stuff on data, or on hedge funds, on asset managers, on things that I had like written I had written the chapters about, and then I got this data that was like, oh, now I have an awesome visualization that sort of is, maybe persuasive to be like, oh, now that I see it, and go from 0 to 400 billion, then it is, shows the scale of this, right? That $20,000 a month thing is crazy, right? There's huge asymmetry in access to information, obviously. A new one that Brian and I have just encountered is we are dealing with Luminate, a business that has consolidated like Nielsen music and all kinds of different music in data and film and TV. And I was talking about how much it costs. And they're like, here are the different tiers. And then at the end, she's like, I'll just mention this, that's what it costs for the premium level. I'm like, oh, so that's what the labels buy? She's like, yeah, and banks, because when they buy the copyright, they want to study the full history of, right? And so, asymmetry in information is huge, and we as humanists and social scientists, musicologists, I unfortunately have to like learn how to play that game to some degree. It's often like not that complicated. The math in the financial world is like super complicated, but the like actual story of it is they're just like stealing from people. I just said there's just like a big pool of money. It's all going into one place. Like it's a really basic story. I just count things to show here's where it's going, where it's coming from. Like it's complicated formula they use to get there, but like a pile of money moves, and like we can tell that story. Like we don't have to be afraid of data.
Yeah, it's kind of funny thinking about that. There's been little pieces of Canadian music history we're after, and you find out that everything now is kind of under one umbrella where that information lives, and sometimes the companies aren't sure how to manage that or retrieve it, and it kind of becomes the role of the researcher to hope that it can stay and remain, right?
I should not have said that
$200,000
thing about Luminate.
Hopefully
that might have been.
But we mentioned earlier the part about its asset, the songs as sort of assets and being bought and sold. And we've probably been familiar with stories in Canada. I know Neil Young, deadmau5, Justin Bieber have sold their catalogs. I think recently Red Hot Chili Peppers were in discussion about this too. Can you say a little bit more about what's going on here, why this is happening so often, and is it something that's going to continue to happen, or was it more of a trend during lockdown when people couldn't perform live and they were looking for alternate models of kind of making that money back that they would have gotten from festivals and tours?
Yeah, so a few factors. Certainly the pandemic made a bunch of artists scared about their livelihood, particularly a bunch of older artists who were like, why not take the paycheck? The other factor was they anticipated a new presidential administration that was talking about increasing taxes, and thus they're like, better do this now, or you're going to have to pay a lot more taxes on your estate if you try to sell it, or whatever. So there's that. There's also the role of this huge increase in streaming and the like more reliable data and ability to understand the value of a catalog. Made for this sort of gold rush, like, oh, we know now that a Queen song is going to have this like 50-year lifespan and make this much money. Put it in a catalog, and you're a lot safer making that a big investment, knowing that it'll pay off over a 50-year period, right? Like you have to think about these time horizons in investment circles. So that's a big one. But I would say, it was a speculative rush, and it is likely to taper off in some ways. You don't hear as many big deals anymore as maybe the streaming music market in the US is mostly mature now. Like the growth rates have really slowed. They don't expect much more take up. There's still like big global pockets where they expect more, but like it's sort of understood now what the value is. There's no like, I can make a speculative bet on the price of this thing going higher. So these companies, I would say, are, they were in on the early side of things, making what they could speculatively. The biggest purchases have actually been the traditional record labels, right? So Universal paid, who did they buy? They paid a lot for Neil Young's, I think. Sony paid the most, $550 million, no, billion, wait, million.
I think it's million, yeah.
Million.
Oh, it was million.
You'd think I would be able to sort these out. $550 million for Bruce Springsteen's catalog, right? That's the biggest sale so far. But again, they are all, the biggest ones are going back to the big three, Warner, Sony, and Universal. And I imagine that eventually Blackstone will tire of trying to figure out how music works and just sell their entire catalog to Warner Music or Sony. They know, Warner, Sony, or Universal, they know how to like actually monetize a catalog, how to do the marketing, the licensing, all that stuff, right? I would say this is a speculative blip. I doubt Roundhill will be around for much longer. Hypnosis is already gone, right? They mismanaged that huge fund they had. Blackstone, their private equity company that was backing them up, took it over. Blackstone is not a music company. They will, sell it to the highest bidder at some point. But it is of a time that showed like when music transitions into a new format, there's this gold rush, and to see who can make the most out of it. It's still the same companies that stay with it over the long run. Now we have this transition to like snippets on TikTok as the new way that music, pop music sort of rises. So maybe there's a new kind of speculative nature there. Some of the research on like how music works in China is really fascinating, just like a totally different world of how music operates. So maybe there will be another but different speculative bubble. But this particular one, I think, is running its course.
I mean, I guess even that, perhaps some sense of a little snippet, putting a hook really early in a song. I mean, that's kind of like a speculative way of writing a song, right?
Yeah.
Thinking like, is this the catchiest part? Is it going to work? Let's put it front and center and hope that it expands and goes as viral or to as many ears as possible, and also very temporary, right? It's sort of a moment and something's huge, and then it sort of makes room for something else, which is interesting, and certainly tied to what you're talking about here. You begin in the book, and I probably won't be able to find it quickly, but there's some nice maps of key places. I think this is here on page something or other, one of the first few pages. We have Silicon Valley, obviously, Northern California, the studio system down around where you were living during your PhD in UCLA for the production of film and record labels. And then obviously the area in New York, Manhattan, where these companies exist. And something that not on that map, obviously, is Canada. But so much of the music we consume, or if you're a musician here, you're kind of reliant on this system, and maybe that's putting it lightly, potentially, or at least the labels, the companies that are typically headquartered in the US. And we're kind of in an interesting moment in Canada where they're looking at things like, can you regulate streaming? What does that look like? What does that sound like? Who benefits? There's obviously a lot of a resurgence of calls to potentially double the funding to the CBC against the new relationships between the US and Canada, at least in this moment. So I guess that's me wondering what all this means for musicians in Canada, and what does it mean to be sort of up here, either listening to music or making music and thinking about this, these forces at work that are operating from, in the early pages of this book, we have these three central hubs, and predominantly what you're talking about here, operating out of Manhattan. So how do you kind of bring this into the conversation that is taking place here in Canada?
Yeah, sovereignty, not something we necessarily talked about a lot until recently. Of course, our work about the Canadian music industry has always been about how do we support a more local, national, regional music industry, getting folks to care about that, thinking about how successful it was in the 90s to have CanCon radio regulations. What does it look like to do that with streaming? Why can't we just say playlists need to have a certain amount? Things like that. The predictive algorithm in Spotify, right? Why can't it just have certain Canadian regulations? It was harder to convince people of that 6 weeks ago. Now it's, I think, a little more apparent. And the looking at the Canadian industry, live, driven by Live Nation, this like really clear monopoly that is being investigated by the FTC in the US, but a great example of that CEO compensation thing I mentioned, the CEO of Live Nation makes the ratio between his salary and the average worker at Live Nation is 5,000 to 1. He makes 130 million or something a year. It is the highest in all of the Fortune 500 companies in the US. Bigger than Musk, bigger than Bezos, bigger than anyone. Live Nation is like a clear monopoly. How much does that affect Canada? Quite a bit. Why do we let them operate in our territory? A question to ask. Universal, Warner, and Sony, right? They have Canadian subsidiaries. Should we question their operations here? Spotify, Apple, and Amazon, the three main streaming, well, also YouTube. Should we have restrictions on how they operate in our country? I think those are questions to ask. I think also the understanding of the success of the music industry is really overstated. Like you will see, like top of the line, how's the Canadian music industry doing? Great, we have lots of successful artists. We've done some studies looking at, like, what if you took the top 3 Canadian artists out of that calculation? If you took Drake, The Weeknd, and Justin Bieber out of it, it plummets, right? They actually account for an incredible proportion of hit songs in Canada, and that is unlikely to last. It's kind of rare to have these global superstars coming out of Canada. It's great for Canadian industry, like there's lots of trickle down from their success, but it also masks how very limited in terms of diversity and variety we have of Canadian musicians being played in Canada. And now I just read a new book, I think it's called Streaming Around the World. Other countries are doing way better, are fostering a local, regional, national music culture despite Spotify, along with Spotify. They are doing regulations, they are doing protectionism, they are supporting artists, and they're doing great on Spotify. And Canadian musicians just aren't apart from
the big three.
The big three, yeah. So there's a lot to be done, and I think now a silver lining of all this sovereignty talk is like, yeah, let's think about cultural sovereignty, and let's think about how we protect and amplify Canadian musicians. There's lots of ways to do that, and yeah, this country doesn't have a great history of like antitrust or anti-monopoly, but it certainly could. That's a growing movement even in the US, breaking up big companies, or at least like highly regulating them, is back on the menu.
Yeah, and I think Canada again is in a situation where there's like 3 artists amongst the top streamed or amongst the Billboard 200. I think Tate McRae has replaced Justin Bieber, and Drake and The Weeknd are still there. So the situation's still kind of the same, which is interesting. But I think, as you say, really amplifies that sense of how well the industry is doing here, and it is for certain artists. And there's a history there of a few making it really big, but often at the expense of that being a little bit more broader. And even something like in the 2000s, a lot of indie musicians going to like Europe and stuff to develop their careers. I think that's almost starting to happen again, it seems. A lot of artists like recording or looking for more connections in cities across the ocean. Let's maybe do one more question and then throw it to the audience. Maybe take another 4 or 5 minutes. And I know a lot of the book is, and I know sometimes people point out the more pessimistic outlook that we're dealing with here, but the book does end with some nice, hopeful ways of thinking about a nice, vibrant musical future. So if there was, one or two things that you talk about in your conclusion as we're wrapping up the book and wrapping up this talk here, that maybe we can leave ourselves with before taking questions from the audience. What would that one or two things be, I guess?
Yeah. I teach a lot of depressing things to my students, but always try to not leave them in a depressed state. But they also, it's just like constant question, like, what can I do? And I'm usually like, what can we do instead? How do we think more collectively? But even individually, lots of things you can do in terms of, I say, like, just don't engage with derivative media. You can, change your own habits. You can make your own algorithm. You can support local, regional, independent, radical, diverse, more variety, do all those things yourself. That's very limited, right? It is not going to necessarily change the structure. So you kind of move up the scale, try to join with other folks, organizations, the Music United.
I think it's the UAW still, or is that that's the United Auto Workers? But I think they have a very similar acronym.
What's that?
UMAW?
Yeah, UMA is what my students are always saying. UMA, United Music Association of Workers. And lots of great organizations you can join that way. And then, getting further up the scale to political things. I mentioned antitrust, anti-monopoly. We can break up companies. We used to do it. You can do it again. Canada could implement that kind of thing. We have talked with I think they're called CAMP, the Canadian Anti-Monopoly Project. The anti-monopoly is a possibility. There's also just like legislative fixes for finance. I say in the book, financial reform is media reform. If we change the way Wall Street worked, we would make a better media culture, just as trickle down from their inability to be so predatory. So you can close loopholes. Hedge funds are like a pretty recent phenomenon. We could just go back to them not existing. There's like a really tiny piece of law that allowed them to move beyond. I think they were limited to 50 clients.
And so many of your some of the graphs go from nothing to so much.
Exactly.
So it's what happens if we just?
It's like that's the thing. Is the graphs are spikes up, right? And you can just we shouldn't have allowed that thing to happen. So hedge funds, private equity. But just general tax reform. There's so much redistribution of wealth upwards, and 80-90% of people disagree with that. They, should we tax the wealthy? Run that survey, and they're like, hell yeah! People want that, and obviously, that doesn't happen because of lobbying, because of how much politicians depend on fundraising and donations. But true democracy would help. Reform taxes, reform finance, which would have a trickle-down effect on reforming media for the better. Now, those are, those are, let's say, reform options. I end the book with maybe reform is not enough. Maybe our constant flow of things is that what little reform we can manage doesn't seem to turn the tide, and maybe thinking bigger, that the other thing when students ask, what do we do? I'm maybe take a second, sit and think and don't rush to action, because our rush to action keeps doing ineffective action. We need to actually stop, think, understand the whole, think of how the system works.
Work together.
System of capitalism that is pushing us towards climate collapse. Capitalism or a habitable biosphere, choose one. That's increasingly a really obvious option, or choice, I mean. And so then, we think about, maybe it's the question of wage labor. We were in an event and someone's like, how do we better monetize music? I'm like, don't monetize, don't try and think of a better mousetrap. Don't try and think of a better system for how musicians can sell music. Think of what a system is that doesn't require selling music. And in fact, music is a great way to think about what a healthy system is. We all want it. We all want to. We all love libraries. We all love musicians. We all want that to happen. Why not build a system out of how that feels and how that social order would work? So I think there's great opportunity in moving beyond our limited capitalist system and in thinking about how we would reorganize our cultural systems. I'll leave it at that. We're increasingly maybe the realistic, that's always been considered unrealistic, right, to move beyond capitalism. Well, increasingly the realistic outcome is a collapse of the climate, and so the alternative to capitalism becomes the realistic option, right? So that does seem worth at least pausing to think about. So that's the like classic reform or revolution. But I love the Eric Olin Wright talks about like you can do all of those things at once. You can like try to tame capitalism and reform capitalism and escape capitalism and revolutionize it. All your different things work together towards an overall systemic change. You don't have to choose. Your little actions and your collective actions and your radical reimaginings all contribute to that goal. And I think music can play like a really essential part of that.
Great, thank you very much. Question? Take a pause. We have some time for questions, I believe. How much time? 15, 20 minutes or so, I think?
Great,
Yeah, 15 minutes.
Please.
If we have them. Oh, sure.
Yeah, thanks for coming to speak with us. I'm kind of wondering about, I think we've all seen stories about works of media sort of being disappeared from streaming platforms, either never released in the first place ostensibly for like some sort of tax write-off, or that are removed and then they effectively become invisible to consumers. Like it's like they don't exist anymore. From the financial side, I think a lot of us don't really understand what's going on there. So I'm wondering if like that's something that is wrapped up in these broader dynamics or what.
Yeah, definitely, right. And so the I think prominent example of that is Warner Brothers canceling some of its big movies, including apparently a Looney Tunes movie that tested like through the roof and looked so good, and they canceled it because it's a tax write-off. If you can show that you had a huge loss in business, you get to write it off, and those are all tax savings, right? And so at the time or Warner Brothers had just been split off from AT&T because of that hedge fund activist investor I mentioned, and so it came with all this debt from a really bad deal, and Zaslav, the CEO, who is a monster, and comes out of the reality TV world of like constant, you're just producing content, see what sticks, no interest in like the history of a classic Hollywood studio or a classic like cherished brand like Looney Tunes, right? That means so much to so many people. And he's like, tax write-off, great, just cancel it. Cancel Batwoman as well, or Batgirl, I think. Get rid of a bunch of things for the savings. And that it really goes against like a sort of core promise of the streaming transition was like, it'll be great when just all the Disney stuff is in one place and all the Warner Brothers stuff is in one place, or Spotify, like all the music will be in one place. That was part of the like promise, the myth of the like celestial jukebox and these things. And I like kick myself for like, how did I not think this? Like, no, of course it would not do that. Every time you watch Looney Tunes, they got to pay the person who made it, right? And so they're like, they are looking at their catalog and being like, what do we have the best margins on? Those Looney Tunes deals were signed years ago, and some of them, the heir of that estate, probably negotiated a huge deal, right? And so why would we keep offering that? And so as of like last week, this week, they're just like there's no Looney Tunes anymore on Max. And yeah, those are calculations, right? And the new Liz Pelly book on Spotify similarly is like they prioritize the music that they have better margins on, and that includes like fake ones, like ghost artists. That includes, you know, they're always going to prioritize the new things they have made at low margin cost. And so on Netflix, especially, there's like 2 movies from before the 90s, I think. The like interest in actually having a decent catalog of things pales in consideration to the, like, what do we have good margins on? Who did we negotiate a more exploitative deal from? We'll prioritize that in the interface, and then we'll let the things go that where we had to pay. Martin Scorsese, you know, gave him a huge back-end deal because, you know, that's how we got him, and we got the press that came with having an Oscar movie. But those things will obviously get de-incentivized later because they have bad margins on it. So yeah, thinking about tax write-offs, thinking about catalogs, thinking about how that promised dream or myth of a platform having it all is like not at all our experience. And instead it is, it's the margins, but it's also the like, we want to charge rent. We don't want to compete in a marketplace where like, what movie's going to win at the box office? What is going to be the #1 hit song? They don't have to worry about any of that. They just charge you rent on catalogs, and then they can manipulate catalogs to be what is most profitable for them. Yeah, it's hard to track, but it is absolutely needs to be known.
Mm-hmm. Yeah. It sort of changes your relationship to history too, right? Or like
definitely
in terms of what you see and interact with the most, and sort of skews and alters that.
I mean, that was an interesting part of the Liz Pelly book, talking about like education. Mm-hmm. Your students might look at a intro to jazz or intro. Her example is like, you want to learn about ambient music. You used to click on like, here's ambient or whatever they call it, and it would have Brian Eno and others. And now increasingly it is all fake artists who made ambient music to sound like Brian Eno, but their margins are better, so they don't include those actual historically important musicians anymore. And so it was jazz, ambient, chill, but a bunch of examples where like to educate yourself or to learn from Spotify is a really dangerous idea, because you're getting fed fake slop instead of the actually important historical musicians in that genre.
So Julia's hand, I think?
Yeah, you gave us a couple of hopeful things to do in terms of the political system, such as advocating for better laws. I'm wondering, what are 2 things that you personally have done as a consumer that is aligned with kind of your hopes for a better anti-capitalist future?
Okay, so in addition to the like, I don't know if we're going to be able to edit out that.
Probably not.
Well, the Luminate thing I think was like
I have other things to do.
I hope so. There are things that I will tell you later that I'm not gonna put on the live stream. But no, I think a lot more consciously about what I consume and how I spend my time. I mean, here's a really good one. You have a phone, if it's an Android, I think it's called Wellbeing. If you have Apple, the versions of that, and like how much time you spend on those things. Take the top 3 ones and say, whatever time you spent, like cut it in half. Like these things are just eating into our time that we would have spent with culture. I mean, maybe you're spending time on YouTube watching the ambient jazz historical artists, but there's a good chance that we are having our leisure time commodified with algorithmically chosen things for us that are good for their profit margins and bad for our mental health and our understanding of culture. That's one. Another is, I don't know, like the understanding the larger media system, cultural system, I don't know how much I can advocate for like, you should want to know that, because it's boring as hell to like understand how hedge funds work. I don't think you should know how, take it upon yourself to have to learn how that works, but I think to have systemic understanding of something requires a certain approach to the news that is like, I care about when a company buys another company and what that means. I care about where our attention and time is going. I care about not just my favorite musicians. I care about like music. I care about like Canadian music. I care about like the genre. I care about like caring about some bigger system or structure and monitoring the health of that in some way. I use like an RSS news reader that allows me to like look at a lot of different sources and really skim and see the big deals that come through. The like, oh, there's like very occasionally an article that will be like, here's what indie film festivals have been experiencing in the last little while. And it's like, I'm always looking for those where some expert can give that overview. And yeah, that kind of training yourself to look for structure is like a really tricky skill and hard to like hone, but it's possible. And in some ways, we are definitely living through the death of news, the amount of journalists who can make a living. On the other hand, I open like 100 or 200 tabs every day. I'm like, there's so much good writing. There's so much out there. Obviously, there is so much good music just not being heard. There are way more movies made every year than ever. So many incredible ones that just don't get the exposure they deserve. And yeah, we can only by thinking systemically, structurally, can we really hope to overcome that. So that's my like, can you get from the personal up to structure? I think you can, like educating yourself, and then like you behave in a way that thinks structurally. Maybe that's something.
Time for one more. Yeah, Shoshi?
Yeah, do you think that there's maybe something that artists might be able to sort of maybe push their fans towards like a right direction? I think of recently like Kendrick Lamar did that whole thing when he was making the music video, right? The whole city came together, which is obviously not something that Wall Street can really do anything about. Do you think that maybe more things like maybe more festivals or concerts or things like that could help push us in the right direction from the artist standpoint?
Yeah, so I would say the number one thing is like musicians need to unionize. They need to have these like collective organizations. In the US, they're like actually outlawed from doing so. It would be considered a cartel if musicians got together. Meanwhile, Universal, Warner, and Sony can actually form a cartel. And anyway, so collective things like that. But on an artist level, yeah, Kendrick Lamar is someone where it feels like the success is not despite, but because of the value system that he uses, right? And that the unwillingness to compromise pays off. And this is not like some authenticity argument, but it is a commitment to his own art, I think, and his city. And his art form, right, that he, that allows him to do that. There was also, the Black Hippie Collective. They worked together. They seemed to really, do features for each other and bring up a bunch of people together. And he was savvy, I think, about, doing a Taylor Swift song or doing certain promotional things that didn't feel dirty or that compromised values in a particular way. When it comes to, festivals, more collective things that are less branded and more like, can you actually do community work? That is so tough, right? It is not something that even musicians should have to do, right? But let's say, you hear the common complaint from musicians like, I signed up to play music and now I'm spending half my time on social media. Now I'm being asked to also do TikTok and I have to do all this stuff that is not music. What if a bunch of musicians were like, instead of, get half our time to actually do music and half our time business, let's call it promotion, all this crap. What if it was half our time on community building, community organizing, festivals, things that were community infrastructure. Like Brian and I are always thinking like universities and campus radio should be tied to the music culture in a way that like, here's a venue that's easy for musicians to use. Let's make a tour circuit of every university. Let's make community-based music. Let's use libraries as streaming services. There are some. They're really interesting. It's a really great model. Again, everyone loves libraries. You could never, if libraries didn't exist, you could not start one now. It's so antithetical to our social order. But people love it, right? And so, like get artists to think about libraries instead of shopping malls and casinos, which is like the main way that the music industry works now. Libraries, community centers, getting a city out, like Kendrick does. And it doesn't prevent you from playing at the Super Bowl and successfully assassinating someone's career. Thank you, Kendrick. But I think it is, a community-based model that is hard to advocate for. And like, I mean, people are trying to pay the rent. Like it is a risky proposition to tell someone like, don't do social media, do community organization. But I think if enough people did that, there would be a lot of support for it. And I'm not pretending this is a new idea. Obviously, lots of scenes do that. Lots of subcultures do that. It's like making it a more attractive option, let's say, for artists who are just coming up and don't realize that that is an option, or don't realize that there's a lot of great historical work doing that, whether it's folk or punk or jazz or whatever, that those didn't happen because of how good at self-promotion they were. They became because of really dedicated community organizing.
Shall we leave it there on community and libraries and great find Kendrick Lamar? Thank you, Graham.